Good morning, ladies and gentlemen. My name is Alya Sofia, and today I would like to present about the impact of COVID-19 pandemic toward Islamic banking and conventional banking performances. So, for chapter one, which is introduction, here is the research background. There are basically two world problems that are affected by the world economy, which is 2008 to 2009 economic crisis and also the COVID-19. IMF believes that the situation that caused by the COVID-19 pandemic is actually worse compared to the impact that's given by the global economic crisis that hit the world in 2008. And nonetheless, the economic crisis of 2008 to 2009 and the COVID-19 pandemic is actually both worst combination, which currently affecting the global economy. And one of the industries that have been impacted is actually banking industry. Banks have become the main financial institution in the financial industry, where banks are priorities in the economic sector of a country. So basically, the banking system requires special intentions and concerns, especially in the midst of difficult situation caused by the COVID-19 pandemic. Also, the emerging events which caused by the COVID-19 pandemic have put the liquidity from instrument into very high pressure and difficulty. COVID-19 pandemic actually forced the government to lock down the economical sectors. So here are the problem statement. Basically, the global economy was expected to have a recovery after 18 years in 2021, which is after 1 year of COVID-19. As the pandemic actually getting worse, it will alter the path of global economic activity. Composite in that is or ICI, the world decreased drastically in 2022 and in 2020, almost all global stock indices experienced a decline. COVID also impacted the stability of global banking sectors, and Islamic banking is actually regarded more crisis resistant than conventional banking. If economic situation getting worse, the Islamic banking act will be less likely to suffer, which is better prepared to deal with the financial crisis compared to the conventional banking. So basically, here are the research question. Basically, we're gonna question the bank performance of both conventional and Islamic banking in the terms of their ROA, which is a net interest margin, and their non-performing loan and loan-to-deposit ratio, and also based on their capital adequacy ratio. And also we're gonna find the difference between in the terms of their bank stock performances. So for the research objective, we're going to analyze the performance and stability of two banking systems, which are Islamic and conventional banks, and prove whether Islamic bankings are more crisis resistant compared to conventional banking. We also will be conducted using primary data from the annual reports from top two Islamic banking and top two conventional bank in 4 countries, which are included in top 10 big Islamic bank assets. So again, we're going to analyze the ROI and net interest margin and the non-performing loan to, and also the LDR, which is the loan to deposit ratio. We're going to analyze also the capital adequacy ratio and find the differences in the price reactions on the stock market during the pandemic. So here are the literature review. The first one is the COVID-19. Basically, COVID-19 is a very transmissible, infectious, and pathogenic virus produced by the severe acute respiratory syndrome coronavirus 2 or SARS-CoV-2. This is from study from Malahayati, Masu, and Angreni, which conducted in 2021. So here are about the Islamic banking. Islamic banking is basically a type of financial transaction that do not contravene with the Quran. And the Prophet or Sharia is basically the pillar of Islamic or Sharia banking, which investor Islamic bank have a better understanding of their money allocation and limit their susceptibility to speculative activity. And it started around 30 years ago, and it's actually have massive expansions now. And this massive use of Islamic finance has sparked attention and debate among politicians and economists concerning the feasibility and validity of Sharia financial model, particularly in facing the current financial crisis. So here are the top 10 leading countries for Sharia compliant assets. And here are the differences between Islamic banking and conventional banking in terms of the foundation. Conventional banking is more like interest-based, meanwhile Islamic banking is more, it doesn't really consider a riba, and therefore in the terms of their operational, the conventional bank doesn't really care if it's halal or not. All they really care about is basically profit. Meanwhile, Islamic bank, halal and profit businesses are really considerable. For organizational hierarchy, is a conventional bank only under the supervision of the central bank. Meanwhile, Islamic Bank is also under the supervision of Sharia Supervisory Board. In the term of the relationship between customers, the bank and customers define the relationship as creditor and debtor. Meanwhile, in Islamic Bank is more characterized as partner, investor, traders, buyers, and sellers. In the terms of their project evaluation and the conventional banking, result of the development, it pays little attention to establishing competence in project review and evaluation. Risk can be transferred for a V in Islamic Bank because it is shared to profit at loss. Islamic Bank places a higher emphasis on the project review and evaluation. And the structure of loan between investor and entrepreneur, there are a predetermined rate of interest, and the return is also guaranteed in the between the investor and the lender. In conventional bank, meanwhile in Islamic Bank, it can encourage risk sharing between investor and fund user or entrepreneurs. So for the COVID-19 impact against the global banking sectors, Indonesia banking sectors, and GCC banking sectors. Basically, towards the global impact, it's of course is the drop in financial stability and worsen the banking sectors. The outbreak also give a significant impact of financial performance, which is the accounting-based and the market-based performance measures, also to the multiple global banking sectors financial stability metric, which is the default rates, liquidity rates, and asset rates. Also, COVID-19 pandemic has give more negative impact toward the stock market volatility. Also, it has a impact on the negative on equity returns. Also, would make the chain reaction, which is about a really bad chain reactions. Also, before the Indonesia COVID-19 toward Indonesian banking sector is basically Indonesia has been one of the countries that have felt the impact of COVID-19 since last year. The threat to instability in the banking sector was felt by Indonesia at the beginning of the COVID-19 pandemic. This was as evident where actually OJK, which is Indonesian Financial Service Authority, explained that the rate of credit growth in bank in Indonesia experienced a very drastic decline from 6.03% in 2019 decreased to 2.4% in 2020. This has clearly threatened Indonesia, even though in the end it is now under control and will improve gradually. The governor of Bank Indonesia stated that in 2022, credit growth in the banking sector could eventually increase by 6% to 8%. Meanwhile, towards the GCC banking sectors, there are actually two problems that GCC countries are facing. Basically, the COVID-19 outbreak and also the reduced income from the oil. So, bank output and stock prices in Gulf Cooperation Council or GCC, where Saudi Arabia, Qatar, and United Emirates are part of, hit a decline in which might be a causes of the result that causes by the pandemic, which also happened in Islamic Bank and conventional bank. The banking system in Qatar so far has managed to weather the worldwide coronavirus pandemic. The entire pool of risk in financial sector, especially bank as a whole in conventional banking, has fallen, but it actually has increased in Islamic banking. United Arab Emirates Central Bank has given aid to entrepreneurs in the terms during the COVID-19 pandemic in the amount of 100 billion AED. And the UAE economy is likely to gradually recover despite of the effect of COVID-19 pandemic. Meanwhile, for the Saudi Arabia, which is one of the highest average equities to asset ratios in the region in the worldwide, as well as the highest tier 1 and total capital ratios according to the Ramsdale. Despite the fact that deteriorating Saudi macroeconomic environment, the bank has shown to be rather stable. If oil price continue to getting low, the situation will actually become worse, as corroborated by the economic fallout of the COVID-19 outbreak. In the term of the bank performance, so basically the bank effectiveness can be assessed from its capacity to analyze the value that exists in its performances. The bank's operating activities are designed with the aim of getting the maximum profit possible by providing financial services to public and companies. The performance of the bank is evaluated in the terms of efficiency, productivity, and competitiveness, as well as profitability. And financial ratios that are going to be used by banking authorities to assess bank financial performance. So for the methodology, here are the population and sample that we're going to use. There are basically 2 Islamic bank and 2 conventional bank from the with the largest asset and listed in the stock exchange in 4 countries, which are United Arab Emirates, Kingdom of Saudi Arabia, Indonesia, and Qatar, and which has like a total 16 that's chosen by the researchers. Here are the ratio analysis performance that we're gonna use, which are non-performing loans, loan to deposit ratio, return of asset, net interest margin, and capital adequacy ratio. So basically, the 16 paths that we're going to use as the object of data in this study, which is throughout the year 2018-2021, by evaluating the bank's health with the scope of evaluating including the following factors, which are the risk profile, profitability, and capital, quantitative data, and secondary data, namely data in the form of figure produced through observation data of financial ratio from financial statement gathered at various points in time, and data which acquired from OBRIS, the daily data on closing stock market indices being compiled from the web database of Yahoo Finance and investing.com, are the type of data that sources that use in the research in the term of stock price data and closing data in monthly time series for 1 year before and after the COVID-19, which was outbreak, which was declared by pandemic by WHO. We're going to also use the stock beta analysis to require a model called single analysis model, and we're also going to use the Granger cross-quality test. For data analysis, here are the non-performing loans results. The bank, Al Rajhi Bank, Alima Bank, BTP, and Syariah, and Masraf Al Rayan are very considered as very healthy. The lowest NPL is Al Rajhi Bank with average of 0.65%. These 4 banks that got rating 1 under LPL are banks that operate best on Sharia financing or Islamic banking, while the other banks are mostly performing in healthy criteria within the range of 2 to 5%. The highest percentage of NPL is owned by Emirates Islamic Bank with an average of 4.96% of NPL, which is considered as less healthy. Furthermore, the Islamic Bank averagely has 2.54% of NPL, while the conventional bank has a higher percentage, which means has a higher percentage. Meanwhile, for average Islamic bank have like in the term of their liquidity risk has 89.56% on their loan deposit ratio. Meanwhile, conventional bank have an average of 93% on their LDR. Both Islamic and conventional bank on average are in the healthy in the criteria. The lowest the LDR is owned by Bank BRI Syariah, the latter merged into Bank Syariah Indonesia, a bank that implemented Sharia principle. Islamic Bank have a lower loan to deposit ratio compared to conventional bank. Both are in the healthy in the criteria with rating of 3. However, Al Rajhi Bank has the lowest LDR ratio and is the only bank in case that are considered as in healthy criteria. So in the term of their ROA, banks are actually considered very healthy in the term of their ROA, and Bank BTPN has the highest ratio. The lowest in Saudi is British Bank, and which is classified as healthy enough. As for the total Islamic Bank have 2.6 ROA on average from period 2018 to 2021, which is considered a high ratio and considered very healthy. In the term of net interest margin, most banks actually considered very healthy in the term of their NIM, with Bank BTP and Syariah has the highest net interest margin. There's not so much differences between conventional Islamic bank, but conventional bank on average have 3.2%. Meanwhile, Islamic bank have higher, which is 5.37%. In the terms of capital adequacy ratio, it shows that banks are considered very healthy. Most of the bank, which bank BTP and Syariah is the leading and has the highest capital adequacy ratio, which is 45.15% in average. Islamic bank in total has higher capital adequacy ratio compared to conventional bank. During 2019, both Islamic Bank and conventional banking had a decline in the capital adequacy ratio. The Islamic Bank went from 20.46% to 20.44%, which is a significant differences, and conventional banking from 16 to 72% to 16 to 42%. In 2020, commercial bank experienced growth in the capital adequacy ratio. Meanwhile, Islamic bank experienced another decline. Both Islamic and conventional bank increased their percentage in 2021. The CRA ratio for conventional bank is higher in 2021 than pre-COVID era, which is in 2018. So here is the list of beta, which is the market volatility. The list of the bank in KSA, there are 4 banks that have been studied, namely Al-Rajhi Bank, Alima Bank, Saudi British Bank, Riyadh Bank. After analyzing and getting the data, Al-Rajhi Bank before and after the pandemic did not really have a significant difference risk. This is an evidence by the decrease in beta data. In the period before and after pandemic, beta value, which is below 1, means the stock has a lower risk than the market average risks. The second case at Alima Bank before the pandemic instead has a lower risk. In fact, after the pandemic, the tabulation results showed a beta value below 1. At the Saudi British Bank, the beta value was negative, so the risk accepted was very low compared to market average risks. In Riyadh Bank, the opposite applies. Before the pandemic, there is a very small risk compared to the after pandemic because the data has increased by 0.2. Even though the risk received is below 1, but the risk shown is greater than before the pandemic. In Qatar, the increase in beta before and after pandemic occurred at bank MRAQ, QIIQ, QMBK, CBQK. It decreased. This happened because many factors outside of the variable that result in economic realization and variables outside the study in decreased rates. In UAE, bank in UAE basically have a risk value also are below 1, which that is a lower risk than the market average risk. So basically, it's considered very low. Meanwhile, in Indonesia, there's an increase, and BBRI, BTPS, and BRAS bank. Meanwhile, at the BMRI bank, the risk decreased by 0.3. Unlike the case with previous countries' banks in Indonesia are relatively high risk compared to other countries. In the term of Granger calculated task for the market return variable from Islamic bank and market returns from conventional banks, there is one-way causality where Islamic banking market return affects on the return of conventional banking. This can be seen by the probability value, which is 0.0010 is lower than alpha 0.5. This shows that there is a relation that affects the market return of Islamic banking toward conventional banking, which another thing to be aided from the causality test is the market return of conventional banking doesn't affect Islamic banking. So the conclusion is Islamic bank have a better and lower NPL ratio than conventional bank between 2018 to 2021. Also, it's far more superior in the terms of LDR. Also, based on ROA, there's no significant differences actually between Islamic and conventional banking. Meanwhile, in their net interest margin, Islamic bank has a higher net interest margin. Islamic bank also have a capital adequacy ratio than conventional banking. So, bank share in the United Emirates did not have a high risk in the term of stock performances and price reaction in 2018 to 2022. Based on the beta value, while bank shares in Indonesia are relatively high compared to other countries. After the offering, Indonesian bank is actually more danger. There was no considerable shift risks of bank stocks in Saudi Arabia during the pandemic. The majority of bank equities in Qatar basically witnessed a drop. Thank you.